Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Morning, folks. Happy Wednesday. Back at it for your Wealth Coffee Chats, Property Management Edition. Today is the 26th of November. It is flying. I don't know about you guys, but better get my Christmas tree up. I think some people already have, so maybe I'm behind the 8 ball a little bit. But hey, welcome along. If it's your first time tuning in, this is Wealth Coffee Chats, Property Management Edition Wednesdays. If you're a regular, welcome back, and thanks for coming along. As you guys know, banner in the chat, questions as well. The more interaction from you guys, the better I go. That's how it works here. So play along, play full out, and I'm sure we'll learn a thing or two, because today's team is a bit of insight from my perspective on some of the things I've been seeing on the news and reading some articles. And I kind of thought a little bit about today. We'd have a conversation of, what's happening in the marketplace? What's the commentary look like, sound like? What are we in for maybe for the back half of this next little 3-4 weeks before the Christmas break, and then into 2026. So I'd love to hear your thoughts as well. But hey, listen, if you're here for the first time, you're not sure who's on your screen as the sun beams in through my window over here. A bit of light into my room here. My name's Sjostedt. I represent the Property Management Group here at R&W in the Positive Collective. So welcome along if it's your first time here. Listen, now today, for Wealth Coffee Chats, rental affordability tightens. Is it a signal for us landlords, or is it just noise? I wonder. Let me know your comments in the chat. I would love to know what you guys think, signal or noise. A bit of conversation around what that might look like. I mean, we've been talking about it for the last couple of years anyway. I feel like I sound like a broken record, I'm sure, that you guys might think from time to time. But certainly wanted to share a couple of things I saw in the last 7 days, which I thought might be interesting. We can start the conversation, and as I say, we can go from there. But I saw something on mainstream media, which is something I don't normally watch, but a report from SGS Economics reported that, hey, Perth is basically the most unaffordable place in the country to find a rental property. And I would agree that if you're a prospective tenant, or a tenant for that matter, excuse me, looking for a rental property in Perth, it is a very, very tough situation. It's a big challenge. Vacancy rates are next to nothing over there, which means there's practically no new supply coming to the market, or existing for that matter. And certainly what's going on in Perth is starting to play out in a few of the other capital cities. So, what it did also recognise, this SGS Economics report, is that in Queensland, they're saying renters are now spending more than 30% of their income to rent rate, on their income to rent ratio. So more than 30% of their weekly income is going towards household costing, right? In a roof over our head. And interestingly, regional markets are in this bracket as well. So doesn't get easier as you go further out from the capital cities, which is kind of interesting. So on that, what we've been talking about here, what does that mean for you guys? Is that a signal that you should pay attention to, or is it just noise and we won't worry about it and we'll just move on with our lives? Now, for the most part, my experience, 15 years doing this, most people see that as noise. They ignore it, they don't acknowledge it, and they have no plan or foundation to navigate that, because where that actually comes into play for the landlord is that when we're not going through the right application screening process, when we're not looking at one's income to rent affordability and ratio, when markets increase and when when rents do rise, there becomes a challenge on that affordability scale, putting pressure on the tenant. And when the tenant's under pressure, it effectively comes in on the landlord. So, REIQ here in Queensland actually surveyed 50 regions across the state. And what they found out of those 50 regions was that 38 of them recorded a 1% or less vacancy rate across that particular region, which is interesting. 38 out of 50 recorded 1% or less. I don't know. I don't have those other 12 regions on my my area, but I can tell you what, it's definitely not in that southeast corridor, sand belt, that's for sure. But what are we seeing? What does this mean? Well, we're seeing a lot of tenants with existing leases and existing homes renewing their lease out of necessity and not because of choice. We are seeing across our business anyway, and for those that don't know, we look after a number of clients and properties in that southeast Queensland corridor, and for Melbourne for that matter. This data is relevant as well for us in Melbourne, that we have found year to date, and I don't see this changing over the next 3 to 4 weeks to the end of the year, but year to date we've experienced a 5% average 5% rent growth across our clients' properties, which is equivalent to about $100 a month in extra rent, in rent growth, essentially. So $100 a month, 5% average across the year, which kind of aligns with what most marketplaces are doing in those particular areas of Brisbane and Melbourne, which is really good for the investors out there. They're seeing some extra revenues, some growth, but of course, what does that look like and how does that play out with one's rent affordability? And like I say, they're now reporting, they're catching on to it. We said this 2 years ago, team, hey, this is coming, and mainstream media, as they do, they catch on far too late. But for for us as property managers, for you as landlords, what's really important and what you need to do with this information is ensure that if you're on the market today, or your tenant is giving you notice to vacate and you're about to go on the market, you need to just be aware of what that next renter application looks like. You need to understand how much of their income is being forwarded to rent, because when markets shift, they may not be able to afford that. Like I say, it puts pressure on them with their budgets and their spending and things like that, and then effectively becomes your challenge that you need to navigate. Caroline's here. Morning. Welcome along, as always. Getting better at clicking these buttons, team. There's a lot of buttons for me to click this morning, but so I get distracted. But I'll quickly share something with you guys, because I thought this would just be a bit more of an information session this morning, and make sure I can do this correctly. Let's have a look. So, as I muck around with this screen, give me 2 seconds, team. I'll make sure it's not really playing out in full, is it? Hopefully you guys can see that. I might try to play this in slideshow mode. There you go. Hopefully you guys can see that. But essentially, this is the headline from PropTrack, from REA. Rental availability is low, but the tide may be turning. Hey, listen, that's an interesting heading. Let's have a look at whether the tide is turning. I've seen this headline before. Vacancy rates continue to decline and have since June. What does that mean? Well, tightening competition in the market makes it increasingly difficult and challenging for tenants. Like we're saying, hey, listen, if you're a tenant in Perth right now, we understand it's super challenging. If you're a tenant in the Gold Coast, Sunshine Coast, Brisbane, anyone in that southeast corridor, increasingly difficult. And exactly those trends we are picking up, that REIQ have picked up, tenants are increasingly renewing their lease, because it is much easier to renew your lease and take that $100 a month increase versus head back out to the marketplace. I can't tell you, I've had in the last 72 hours, I have had 2 people that I know within the industry, right? Within the industry, call me for help because there are challenges. So it doesn't discriminate on just because you work in property doesn't mean you've got an advantage, right? But this is what's happening, and national vacancy rates 1.4% across the country from September to October. And even though that's a slight increase of 0.25 to suggest the tide may be turning, what I can tell you guys, it relatively doesn't mean a thing. Now, when we look at this, you can see what it looked like pre-COVID in 2020. We had a bit more of a balanced market, close enough to a balanced market as we could have got, I suppose, at that 2.5%. Slight spike when COVID hit, obviously, and then kind of ever since then, over the last, 3 years in particular, but you can see that trend from 21 that started, vacancy rates have remained as low. So we are nowhere near, we're effectively half the vacancy rate of where we were pre-COVID levels, which is interesting, sorry. And, we need to navigate that through there. So, we've got low supply, increasing demand. I mean, in Queensland, I read there's another 40 to 50,000 new residents coming next year in 2026. I'm not sure how our business is going to help those people because we've got about 6 properties on the market. So it's one of those things, team, where listings, demand, etc. It's quite interesting. So that might suggest we're getting some more growth. But what I did see via PropTrack here in the ABS was new loans and where they're coming from. Interestingly enough, investor activity is actually up at the levels since 2015. You'll see that light blue line, that spike there between, you can see sort of 2015 dropped off through to 2020, and then 2025 levels back up there. Investment loans are up 13%. They're actually making up 41% of all new home loans, which is very, very interesting. Does that mean the supply levels are going to suddenly increase? I'm not too sure, but because what we are finding this year, 2025, and even for the 2 to 3 years prior to that, whilst vacancy rates have remained low, we've had a number of clients, strategically or not strategically, sell their asset, and they've sold an investment property. It's been purchased by an owner-occupier, and then we didn't get that rental property back on the market or in the market for that matter. And so, there's a lot of that, which is kind of interesting, that owner-occupier market as well. But yes, investment loans making up 41% of all new loans. And essentially, I think that's because from an investor's perspective, and I've just gone through this myself, it's a bit more attractive. We've had a couple of rate cuts. Rents have gone up, so potentially depending on location, your yields a little bit stronger than maybe what they were sort of 24 months ago. Again, but that first home buyer line, watch that space, because you've heard Sam and the team talk about it. The 5% in over the next 3 to 6 months. I would suggest that red line is going to taper up, not down. But here's the headlines, team. Signal or noise, rental affordability data shows dire situation across Australia. I don't think that's news to anyone. I think we'll all experience it. Certainly, like I say, across our Queensland team right now, we've got about half a dozen properties available. I've got people within the industry asking me for help. It's really challenging. There's no, ultimate solution at the moment until they fix supply. So, rental market, I think it will continue to stay competitive. It will. I don't think there's any meaningful ease coming anytime soon, and so the market pressure will stay tight. But to end on a good note, what does this all mean in 2026? Well, saw this article via the Courier Mail. Queensland property market is surging double-digit prices. So predicted growth next year 6 to 10% across the country. I saw when we look at compared to what Sydney expecting 3 to 6%, Melbourne anywhere between 4 and 7%. Capital growth, and Queensland apparently another double digits coming. And I think if you've been listening to all the podcasts, you listen to the team, I think you will say this was coming. So it's interesting times into 2026, team, because I don't think it eases up as the headline might suggest. It's certainly a bit of a signal, I would say, not necessarily just noise. And so for us as landlords, we just need to be aware of what's coming. Make sure you're talking with your property management team about really good, diligent, and information and evidence-based rent reviews. You get one chance a year, team. Certainly would recommend paying attention in that space. There's been slight tweaks and changes, particularly down in Victoria. We need an extra month's notice now. So just keep in mind what's going on. Make sure you're organized. Make sure you're prepared. Make sure you're looking at the right data. Challenging property managers, having a look at yourself, not just taking someone's word for it, because that rental affordability is going to tighten. If you've got a tenant in there, or you're just about to prove a tenant who's already got 40% of their income going towards rent, certainly I would suggest 2026 is not going to get easier. And therefore, when that pushes up from 40% to 45%, the likelihood that they either vacate and you're going through that relet cost process again, or there's some actual payment challenges, then we'll understand why we got ourselves in that situation in the first place. So just keep an eye on that, team, and you'll be okay. As always, if you need any assistance, emails below. Anytime you guys need some help, part of the Six-Star team, so cost you nothing. Reach out, say hello. Otherwise, team, that's it for Wealth Coffee Chats today. Don't forget, tomorrow, the financial planning team's back. We'll keep running this for a few more weeks in that little sprint before Christmas, and we will all then put tools down and have a break. But until then, come back tomorrow, 8:10 Queensland time. Check your local guides. And as always, thanks for playing for that, team. I will catch you later. Enjoy your day.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the Six-Star team here at positivementor.com.au.